In exactly 3 days, Bitcoin is likely to see an explosive move. And in today's video, we're discussing exactly what is happening with Bitcoin and the altcoin market, where Bitcoin is likely to move to, what the key trigger points are, and how you can prepare for the next move. Let's go ahead and jump on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day. In today's video, we are doing a deep dive into Bitcoin's macro and short-term price action, as well as taking a look at the total 3 market cap, as we are seeing some initial warning signs of potential exhaustion, which could spill over into a correction if not absorbed. We'll also be jumping into everything you need to know about the short-term price action, what is likely to occur, where we are going next, and of course, how you can plan and prepare for the next moves. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you were interested in taking your trading to the next level, join us over in VIP. We post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to all of our group chats, our general chat, our trading chart and education chat, our daily video, our help, our news, and of course our trading setup chats. If that is what you're interested in, go ahead and contact me in the pinned comment of the free channel by clicking my name, or clicking these 2 links for our entire trading track record, or a video showing you inside VIP itself. Go ahead and check it out, guys, and let's jump on in. So as we can see, over the past 24 hours, Bitcoin was able to climb upwards to retest our prior all-time high, sitting at around 93,000. In fact, Bitcoin was able to push upwards to create a new all-time high, just shy of 94,000. As we said in yesterday's Telegram post, we stated we are still taking the bullish stance, expecting a move higher while this trend holds. If we zoom up in the image, we pretty much saw that trend, that short-term uptrend hold, and we saw the move right up into that 93.8k level, perfectly hitting the target before then seeing a pullback. So as we can see, Bitcoin is still very much sitting above this respective diagonal uptrend, and we are forming some sort of ascending triangle formation within this greater horizontal structure. We'll be taking a very close look at what is happening in today's video, as we have some major bullish and bearish trigger points we need to be very much aware of. We'll also be taking a look at our total market cap over here. As we can see, the altcoin market cap is forming what we would consider a rising channel formation into a pretty critical resistance, being that 840 billion. This pattern is a representation of potential exhaustion. Now, whether or not this exhaustion will spill over into a correction is uncertain. However, we do need to take a look at this and actually take it at face value and apply some significance to it, particularly because we are sitting at a level of resistance. A break or invalidation of this structure toward the upside will trigger the parabolic altcoin phase we have all desperately been looking forward towards. So let's go ahead, guys, and start off with our market data. We'll come back to all of this in the video today. Moving over, 24-hour liquidations and volume 240 billion, down 11%. Liquidations 292 million, 180 million coming from longs, 111 coming from shorts. So pretty evenly split. The DXY has retested the range high and has rejected from the range high, which is a great sign for risk assets. We are expecting now a directional continuation back towards these lows over the coming months, and of course, if we do see that, we are eventually expecting a move to 96. This would be very bullish for Bitcoin and very bullish for the S&P 500 and traditional asset markets if we see the DXY drop go. So we are definitely watching very closely at this resistance. If we do see the DXY break this high and we sustain above the high, we could see a very strong move upwards. However, right now, the resistance is resistance until it is not, and we are expecting a sweep back to the lows over the next 2 months moving into 2025. Looking at the S&P 500, a pretty decent weekly candle thus far. We are sitting green at 5,944. As we have stated many times, we are bullish on the S&P provided our weekly highs hold. If we drop back below these weekly highs, that is when we are going to be turning bearish on the higher time frame, as it will be the first time on the S&P 500 since we broke out and went to the uptrend over here back in May 2023 that a prior higher high has been invalidated. This was a higher high here, this was a higher high here, and of course, our most recent higher high. As we can see, we have not broken down below these prior highs. We've retested them. We have not broken weekly candles below. So a weekly candle close below would mark, in my opinion, the start of a macro downtrend for the S&P 500. So therefore, I am bullish until that occurs. If you want a price target, we don't have one. We have had a price target of $6,000. Ever since this point here, we have been calling $6,000 every day for a year and a half. It's been getting a bit boring, but we eventually got there. Now we are playing level by level. So keep an eye on it, guys. Let's jump over to Bitcoin. Before we get into the video today, a quick word from today's video sponsor. If you want 15 to 45% off all your trading fees for life, that is a lifetime discount, sign up to any of the links down below, BitGet, BitUnix, or BingX. Every single one of those links will give you the 15% off, as well as a hefty sign-up bonus for completing a couple tasks. These are the exchanges I personally use to trade on and all my members use to trade on. So join those exchanges, trade with me, and support yourself by joining those links, and we'll catch you back in the video just in a second. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and get stuck back in. And I figured we're going to start off with probably the most bearish point of today's video, and this is just a warning sign. This isn't saying the altcoin season is done. This isn't saying we're not entering a parabolic phase. But what it is saying we are seeing some exhaustion here moving into our macro resistance. And if we do zoom out, we do know that the macro resistance is going to be that yearly high. This is sitting around 840 billion. And we know that a breakout on the total 3 market cap above 840 billion is what is required to send altcoins into their parabolic phase. So we know we are sitting at that resistance. What we can see at the moment moving into this resistance is a classic rising wedge formation. Now, a rising wedge formation is an exhaustion structure. It's a representation of an uptrend where we have our uptrending diagonal support and we have a converging uptrending diagonal resistance. This is signifying that as the price action is rising, demand is starting to decrease and exhaustion or selling pressure is beginning to increase. Generally, not always, do these structures result in corrections. The corrections which come from these structures vary in depth. We can take a general measured move of the width of this wedge, which is again point A to the high of the rising trend line, applied to the perceived breakdown point, which gives us a maximal target of a correction back to 650 billion. Now, I do not think we are going to see that. However, this uptrend is going to act as a very, very important invalidation, meaning if we do drop below this uptrending diagonal trend line, we should potentially be quite concerned for a short-term flush for altcoins to occur. On the flip side, we have a uptrending diagonal resistance moving into the 840 horizontal yearly resistance known as the parabolic altcoin trigger. If we are able to invalidate this structure toward the upside, meaning breaking above the structure, the exhaustion which this structure represents will have had to have been absorbed for the price action to push upwards, meaning that even though there was significant selling occurring at these levels, the demand in buyers were able to absorb that selling pressure, hence the exhaustion, absorb it and result in a push toward the upside. That would literally trigger that parabolic move. So we do have a bearish structure here. We do have something we need to be, concerned about in the back of our minds. This isn't going to be the end, be all and end all for altcoins. At the moment, we are still in an uptrend. If we do break down, it is definitely something to be slightly more concerned about. And of course, if we do invalidate this structure, the parabolic phase for altcoins is very, very likely to commence. So let's zoom out one more time to the higher time frame charts here and discuss what this means on a higher time frame perspective. So as we can see here on the daily chart, we are still sitting in that critical area of resistance. Let's move over to a weekly chart. Actually, we can see this yearly high of the total 3 is sitting at around 824 billion, literally the level we are testing right now. We have got that range high, which pushes just shy of 840, it's around 839, which is our major level of resistance. Again, like we said, resistance is resistance until it is not. I would definitely not be aping into altcoins right here. We took our altcoin positions back at 650 billion on the breakout. We have been riding those up ever since, but I would not be entering late altcoin positions here. I would much rather be waiting to see how the price action responds to the developing rising wedge and the $840 billion level. Again, a break of those two respective levels will highly likely result in the parabolic phase for altcoins. And if we get that, you can enter new positions upon the breakout with massively reduced downside risk in comparison to entering here at resistance. Moving over to the total market cap. The total market cap is actually looking really solid. Now, there are some things we are watching here, such as the weekly bearish divergence potential for developing. We do, of course, have a much lower RSI in comparison to our highs back in March. This is a potential warning sign for a reversal, but again, we are breaking through our prior high right now, and provided we are able to sustain above that high, we are very much looking for macro continuations toward the upside. So overall looking solid. Let's move over to Bitcoin. The Bitcoin chart is looking decent. And as we said in yesterday's video, our target was for a move to 93.8, just above this prior high point. We were looking for deviation into the range high, which we saw perfectly. At the moment, for Bitcoin to push higher, we need to invalidate this deviation. So right now we have a range high. This is deviation indicating the price action was unable to sustain above that region. We need to invalidate this as deviation to push higher. To do so, we have to break back above that initial high at 93.3. So $93,380 is the point of which we need to break back above to see a continuation upwards. Now, I would actually not be bullish on Bitcoin on the short term right now, and I'm going to explain why. Number one, we have got our major uptrend, which is represented by the diagonal trend line, but we have just seen deviation of a range high. So at the moment, between the points of the prior range high and our uptrend, I am taking more of a neutral stance. I am being more neutral on Bitcoin right here. I'm not expecting a correction, but I'm not expecting a continuation upwards. I am watching our validations. The validations being the diagonal uptrend breaking down, which will result in a correction, or this prior horizontal region once again breaking up and invalidating our deviation, which will trigger a strong move into $100,000. If we take a measured move of this channel, we can see applied to a breakout point, this takes us well above $100,000, about $100,600 is the target if we are able to break upwards. So right now, between these two trigger points, our range high, 93.4K, and our uptrend, which is sitting, was a dynamic price point, with our diagonal uptrend, I am in a neutral stance. If we break upwards, I expect higher. Now, by doing so, we will likely see the total altcoin market cap break upwards as well. Fantastic, triggering the bullish, the parabolic phase. However, guys, this is where the danger becomes, and this is why I am currently neutral. If we break downwards from this diagonal trend line after deviation, we know already what happens on one side of a channel is equally likely to occur on the opposite side of the channel. We are pretty likely to see deviation below our strong low, which could result in a strong correction for the market. and for the altcoin market. Now, even if this happens, the macro charts are still bullish. Remember, the macro charts will still be bullish even if we see a correction. I do want to say, if we see that correction, there will be a lot of people saying the top's in, a lot of people saying altcoins are doomed, a lot of people are saying it's over. But even if we see that correction, the macro charts are still bullish, and we'll explain that in just one moment. But at the moment, as we approach this apexing point, right, which apex is around the 23rd of November, so it's not too long really. This is like 3 days. We only have to really wait 3 days until we will figure out whether or not we're breaking upwards or going back down. So really 3 days, guys, to find out, okay? We will be having a pretty clear confirmation of a continuation upwards above here and a continuation downwards below here. Now, if we do push down, we are watching our prior lows. We're watching 88, we're watching 87, we're watching 86. And of course, if we drop below 86, that is when the true pain really happens for Bitcoin. Now, I'm not a bear. I don't want the price action to go down, but we have to be objective, we have to be realistic, and we have to be honest with ourselves when we do analysis, because the cost of lying to ourselves, the cost of stroking our biases results in losses. It doesn't matter if you're right or wrong. What matters is if you make or lose money. That's the whole aim of the game, right? So right now, this is a game plan I am taking, and I'm going to be a little bit more conservative for the next 3 days as we approach this apex point, indecision for the continuation or that correction, particularly with the total market cap at a point of major resistance right now, the total 3 market cap at resistance, and of course a Bitcoin just deviating from a range high. I want to be a little bit more cautious in my positioning. That is how I'm playing, guys, but let's discuss the macro. So like we said, even if we see a continuation down, now this isn't going to happen until the uptrend breaks. So provided we remain above the uptrend, we will likely not even see this occur. But if we break below that uptrend, we will see a correction. But I'm going to say, even if we see the correction, the macro charts are likely still bullish, because if we move over to our macro charts, we can see on the higher time frame, while we remain above the Ichimoku cloud, leading span A, and the Gaussian channel upper band on the weekly, we are in a macro uptrend. Only upon the breakdown of these two levels do we enter a macro downtrend. We have seen in the prior cycles, only upon the breakdown of these two levels do we enter a macro bear market. Now, this isn't going to predict the exact top for Bitcoin, but it's going to enable you to get out before the macro downtrend commences. Another method we can take a look at is going to be the 2-week baseline of the Ichimoku cloud. We can see while we are sitting above the 2-week baseline of the Ichimoku cloud, we are in a uptrend that is sitting at a price point of around $67,000. So provided we remain above here, we are in a macro uptrend. If we drop back below that point, we enter a macro downtrend, and we generally see a bottom when that baseline crosses over the leading span B of the Ichimoku cloud indicator. That is when we bottom. So right now, the macro charts are bullish. We are seeing some short-term warning signs that we need not ignore, particularly on the altcoin market. We have only 3 days remaining until we get that confirmation, until we get the confirmation that we are going up higher and thus entering a parabolic season for altcoins, or we might see a market-wide flush. But we're going to get one of the two. It's going to be quite intense. I definitely think we're going to see a bit of a steeper correction or a strong continuation. I know that sounds dumb. It could go either way, right? But the most important things with that when we apply it to context is what needs to occur for those particular scenarios to play out. And if you wait for the trigger for that particular scenario, you can play towards that direction. So if we just say up or down with no real justification or what needs to occur for those scenarios to play out, yes, it's pointless. But when we're providing these justifications, such as for us to see the continuation higher, we need to invalidate this deviation. Upon the breakout of the prior range high and getting it back above that prior range high should not only trigger the continuation into 100K or very close to it, but also invalidate the possibility for a continuation downwards. And the alternative scenario would do vice versa. A breakdown of the uptrend would validate this deviation was the high and increase the probability for a correction into our prior lows, and then we'll be watching for that move to play out. But I'm going to leave it there, guys. Thank you for tuning in. Have a fantastic day. Let's see what happens. 3 days remain, a big move coming, and I'll catch you guys in tomorrow's video. See you then.